Good evening, everybody.
Good evening.
Thank you so much for coming along to our webinar for March. Obviously, it's the end of March. My name's Alex, and this is Andrew.
Thanks. Evening, everybody.
And tonight we're going to be discussing a really cool topic, actually, and one that we go back and forth on in the office every day, to be fair. And it's, is this where you should be buying your next investment property? So what we'll do is we'll look at to begin with, I guess we'll look at a couple of different factors that we look at when determining where we should buy an investment property. And then what we'll do is look at a couple of locations. But Andrew, I mean, what have you been seeing out there in the market? You're on the phone to buyers every day. So what's the market doing?
Basically, I think we're seeing, as I've said before, the market's definitely improving a lot this year. There's a lot of, as we can see, it was great the OCR didn't go up again in the latest review, which I think has made or given investors more confidence out there.
Yeah.
And I think the market's definitely, it's not taken off, I wouldn't say, but it's definitely a lot stronger. And the savvy investors now they're getting in there and taking advantage of, especially off planned projects where, you might, as we've discussed in some of our previous webinars, put a deposit down, now, and in some cases, not even a deposit. And then, we can see that interest rates probably, it seems like from a lot of the talk out there, they're going to come down a bit sooner than we thought. And there's a bit more pain in the economy than we probably initially thought as well. And you can see that talking to a whole lot of different business owners, there's a lot of different industries struggling, which isn't great for them, but I think it's good for the property market because it means interest rates will come down sooner, investment properties become more affordable for people. And if you're settling a property in a year and putting a deposit down now, locking in the price now, we'll definitely be seeing better interest rates, and the cost to own will be a lot better then. Yeah, I mean, what are you seeing out there?
Yeah, very much the same. Do you think it's certainly fair to say, while it's not booming out there necessarily, it's busier than it has been probably over the last 24 months, really?
I'd say definitely. I'd say this year's the best start to the year we've had, sales-wise in the last couple for sure. Last year wasn't a great year for sales, as everyone knows, and I guess the construction industry is starting to feel the pain of that now with less builds happening just because less properties were sold last year, whereas now we're starting to see that change, and we're seeing, I guess, more activity in the market, especially from more seasoned investors that realise that now is the time to get involved while prices are still low.
Yeah, I think especially in the new build space as well, developers are more bullish than they probably have been over the last couple of years. They're releasing more projects. Prices seem to be creeping up slowly and don't typically seem to be overly enthusiastic to negotiate on price at the moment, especially if it is a new project that has generated a lot of interest.
Yeah, definitely. I think so. And a lot of those incentives that developers were offering, they're the same as they previously were. So that obviously shows that projects are selling easier, and there's a bit more heat in the market than there was definitely last year.
Yeah. Okay, cool. Well, let's get into it. Just a little bit of housekeeping before we begin. Any questions you've got during the webinar, please do fire them through. We will answer them, but we'll probably just hold off until the end is the easiest way to do it. So send them through. If we don't answer it straight away, we're not ignoring you. We'll do a Q&A session at the end, and that'll be your chance to ask any questions, really. So what I'll do now is I'll share my screen and we will rip into the webinar. For some reason it's not sharing. Give me a sec. Okay. Right, so obviously the topic, as I said, is this where you should be purchasing your next investment property. What are we going to talk about today? We'll briefly touch on the Property Factory and what we do. Now, I know a number of you have attended our webinars in the past, so we will try and skim over this relatively quickly because you would have heard it before. But obviously we do have new people turning up to the webinars every week who might have signed up through an Instagram advertisement or a Facebook advertisement that might not be as familiar with others as to what the Property Factory actually does and what we're all about. So we'll touch on that briefly. As I said earlier, we'll then look at some fundamentals of choosing a location to invest in. And then we'll actually look at a couple of locations specifically. And they're probably locations, to be fair, that aren't talked about too often in the property investment space. Obviously, Auckland, Christchurch, and Wellington are spoken about all the time, really.
Yeah.
But the locations we're going to discuss, and I won't mention them yet, yeah, probably don't get as much attention as they deserve.
I don't think so. Probably overlooked by a lot of people, but shouldn't be for a number of reasons we'll talk about tonight.
Yep. Okay. Right. So, what is the Property Factory, and what do we do, Andrew? You're the boss, so you tell me.
Well, basically, as a lot of you guys have probably heard before, we're a real estate company that specialises in off-plan new build type property. We work with a lot of investors and first-home buyers in the market. And the idea with us is that we look at a lot of different properties. We work with probably over 50 developers, not at any one given time, but there's probably 50 different developers at least that we would work with. And we look at a lot of different projects, and for different reasons, we pick the ones we think offer the best opportunities in the market and put those on our website. And basically the idea with us is all the work's done for you on our website. You can go to one of our deal pages. All the information's there, whereas if you're looking at a listing on TradeMe, a lot of the information's not there. You have to go and do your homework yourself. So we do a lot of that work for buyers, first-time buyers, investors, even homeowners, and as well as that, we've got a lot of tools we can use to help people get into the right property. We can provide advice on investment properties and that sort of thing. So that's a bit of a rundown on what the Property Factory does.
Yeah, so I mean, why work with a company like the Property Factory as opposed to dealing directly with a developer or a traditional real estate agent? We do due diligence on all of the developers we work with, so we check out their track record and things like that, make sure that they're actually going to do what they've said they're going to do. We're obviously new build and off the plan specialists. We know the industry through and through and how the purchasing process works. Also, all of the pricing is that we sort of offer or is advertised on our website is often pre-negotiated. So we'll actually sit down with the developer and work out which price points are going to work for the buyers we're working with prior to taking on the listing, essentially. So a lot of that negotiating is done prior to the buyer actually being involved. And then obviously we also have sound investment knowledge as well. So we understand the property market, what makes a good investment. And yeah, also when purchasing a new build, obviously there's a sort of a construction timeline. So there'll be, say, 6, 12, maybe 18 months between the time you go unconditional on the property and when you actually settle the property. And so upon settlement, our team will be with you every step of the way to basically ensure that the property that has been built is up to standard, and we'll look after you through that process as well. So yeah, that's a little bit more about what we do, really, in a nutshell.
Cool. And then what do we offer at the Property Factory? We've already spoken about it a bit, but we do have one of the largest new build stock lists in the country. Probably what we do have on the website is just the tip of the iceberg as to what we can actually provide. So I do talk to our salespeople about that if there's something that doesn't quite suit. There's heaps of other projects. We do have access to a lot of projects. We really do. So but we feel the best ones are on our website, but there's plenty of other projects there that you can get access to as well via talking to us. We provide cash flows on all of our projects, which it wouldn't be common, as I said, if you're looking at a listing on TradeMe, but from there you can work out how it looks from a cash in, cash out point of view, and how that changes over a 10-year period, along with what sort of equity gain we might expect on that property based on what sort of capital gain we expect, etc. We're doing investment analysis, of course, on all our projects, like we've discussed, and we have a lot of inside information about developments and what sort of deals we might be able to get based on where the developer might be in their sales or build process. And again, we've spoken about some of this in the previous webinars, but there might be early stages of a development where you can get cheaper pricing, but then later on, once funding requirements are met, there might be a point where you can get lower deposit, but you might have to pay a bit more, as the pricing rises through the development. And there's all sorts of reasons why developers might want to sell at a discount or offer different incentives, and we understand where those opportunities are at any given time, and then we can pass those on to our buyers. And investment capacity report is one of the great tools that we offer, and basically what we're doing here is providing you a snapshot of your own personal balance sheet, where you're weak and where you're strong with regards to how the bank looks at your lending situation, which is the most important thing when getting into property investment. Is what can you borrow, and where are you getting held up? What's affecting your borrowing? Is it income? Is it lack of equity? And we basically work out this in the report and tell you what you can borrow based on pure equity, pure servicing income, and then we work out where your weakness is, and we help provide properties that strengthen the area of your own personal balance sheet that is the weakest. So it's a great report. You can fill it out on our website. It's called the Investor Report at the top. Go in there and fill it out, and it'll get emailed out to you, and it'll give you a really good indication of where you're at. And then, one of our sales team can speak to you about it and what the best options are. So yeah, it's a bit about what we offer. Again, here we're just talking about our track record when buying off the plan. It's really important that we work with developers that are actually going to do what they say they're going to do and get something built within a reasonable time frame, but basically get it built is the key thing. And they're the horror stories you hear with off-plan developments, where people put a deposit down, it sits for years, never gets built, and then the deposit's tied up in a lawyer's trust account for years, and then they lose the opportunity cost of buying something else. So we can say we've sold well over 500 properties now, and all of our developments have got built. I mean, some have taken a little bit longer, some have been a bit shorter, but they've all got built, and that's the main thing when buying off plan.
I guess probably at the moment it's not a bad thing if a development takes a while to get built. Is that a fair assumption, do you think? Yeah,
I would say so. I mean, at the moment, I wouldn't be too worried if a development was taking a bit longer, because the longer it takes, the lower your interest rate will be that you lock in when you settle it, and the higher your rents are going to be. So yeah, I think at the moment it's not a bad thing, but it takes a bit longer, as long as it gets finished in the end.
Okay, cool. So that's a little bit about the Property Factory and what we do. Nice to get that out of the way. But let's get into the crux of the webinar now. So what we're going to look at initially is 4 things to consider when choosing a location to invest. So essentially those 4 characteristics on my screen right now are the characteristics we're going to talk about, and we'll just go into detail on each one of those as we go through the webinar.
So yeah, location, and I guess choosing a location, and why is this so important? We think it's very important to get the location right, because if you're buying a property say you're buying it for your retirement and you want to build equity in that property over a 10 or 20 year period, capital gain is very important. So obviously yield's important, because you want to be able to service your lending on the property. But when you're looking to build equity for an end goal of building equity for retirement or whatever it might be, then it's really important to get good capital gain and buy in areas that outperform the average. Like if we're looking at the whole of New Zealand, I think the average capital gain in New Zealand might be, what is it, Alex, about 6
or 7%?
I think it's over 20 years. And what we want to do is put our buyers into locations that way outperform the average, and even 1.5% or so in capital gain can make quite a big difference in equity growth over a 10 or 20 year period. So really important to get that right. And we can just see on this graph here, say for example, if Alex bought a property in an area where the growth was 5% per annum, the difference, as opposed to 6.5%, so that's only 1.5% difference in capital growth over a 10-year period, as the capital growth compounds over time. The difference in equity gain is 148,000, which could be it's quite a sum of money. And then if you look at it, the difference over a 20-year period, it's huge. So it's a lot higher, about 500,000, and that's basically just the power of compounding capital growth over time. And that 1.5% really adds up over time. So important to get a location and sort yourself in a location that outperforms the average as much as possible.
Okay.
Because it makes a big difference at the end. Yeah. So, and then that's something we'll look a bit more, we'll show you with some of the other concepts that we talk about, how we go about doing that, making sure we outperform the average, which is what we need to do and what we should be doing, recommending properties to our clients.
Yeah, and just out of interest, do you think, I mean, there's no right or wrong answer necessarily, but are you better to purchase in a tried and proven location like Auckland, for example, or try and pick spots that are going to pop off, so to speak, in 10 years' time or 20 years' time?
Yeah, it's an interesting question. And I mean, there's pros and cons for both. I guess you're probably potentially a bit safer buying in somewhere like Auckland that, you know, always outperforms the national average. But that doesn't necessarily mean that there might be locations elsewhere in New Zealand that will outperform Auckland. I guess it's a matter of taking a chance on that location and taking a calculated risk, I guess, knowing all the information about the area and what's going to happen there. I think there are areas that can outperform Auckland, but yeah, I mean, there's pros and cons of both, I guess.
Generally speaking, though, would expect a major centre to grow, or house prices in a major centre to grow faster than that of, say, a regional town.
Generally, I would say, and unless there's something special happening in that regional town,
Yep.
unless there was a lot of development and different things happening there that might cause it to outperform the average. But generally, you know, you get more steady, more consistent growth and better growth in the main centres. But there's always exceptions, which we might talk a little bit about tonight.
Okay, very cool. Speaking of, so I guess some common misconceptions that really go hand in hand with property investment and misconceptions we hear and talk about every day. I think probably the biggest one we get a lot is, I want to invest in something that's close to my own home so I can drive past it, make sure the tenants haven't burnt the house down or anything like that. That is, you know, so we get investors telling us over the phone or in person, I want something that's within close proximity to my house. But in reality, it doesn't make any difference, does it? And to be honest, you're probably better off not being able to see it, because then you don't need to worry about it.
I think so. I mean, I think, you know, you're buying an investment property as an asset class. I guess you need to be looking at it like that, as opposed to a house down the street that you're buying because it's around the corner from your own home.
Yeah.
But just because it's around the corner from your own home may not make it a good investment. So you're probably better off buying somewhere else where it all makes sense and giving it to a rental manager and forgetting about it.
Yeah.
Basically.
I mean, especially if you live in a small regional town, for example, and you want something that is going to grow in value relatively quickly over time, it may pay to look at some of the main centres, and obviously that's not an option if you're purchasing within your hometown. Not to say that investment properties in small towns don't make sense, but certainly, I guess, you know, places like Auckland, for example, have a proven track record of relatively consistent house price growth.
Yeah. I mean, yes, Alex, what if I was to say I was an investor and I thought, hey, look, I'm looking at these houses, but I wouldn't want to live in these houses, so you know, why should I buy one? Because, you know, I wouldn't live there, so why would anyone want to live there?
Yeah, and that's a good point, and one we get often as well. It's probably would be one of the biggest misconceptions out there.
Yeah.
I guess, you know, often at the Property Factory, we're recommending 2 or 3 bedroom townhouses in, you know, an inner city suburb, and for young professionals, for example, that's perfect because they don't want to have to deal with maintenance or anything like that. And so while the investor with 3 children and a husband or a wife and 2 cars might not live in the property themselves, it's perfectly suited for you know, a different demographic of people. So I guess it's just important to take into account, you know, while property doesn't work for you in your circumstances, it certainly will for somebody else. I mean, there's a property out there for everybody, really. In fact, one of my good friends recently purchased a house, and he purchased a 3-bedroom townhouse. The reason being, he just didn't want to deal with maintenance. And he probably could have bought a standalone house somewhere similar for a similar price. Well, you know, in the area for a relatively similar, or in a worse area for a relatively similar price point, but he just didn't want the hassle of having to deal with lawns and hedges and maintenance. So
definitely a big one, isn't it? And I guess you really just need to be looking at who's your tenant going to be, and is there a demand in the market for that sort of property from the tenants that we're looking, that are going to rent their property.
Yeah.
And that's the main thing, really, not what you would necessarily live in yourself, because your circumstances might be quite different to the tenant who's going to be living in there.
Yeah, I mean, size is a big thing as well. Like, but again, that's often the reality of inner city living.
Yeah, that's right.
A young couple don't need a big house, nor do they want one, and I guess they're the perfect tenants for smaller investment properties.
Yeah,
that makes sense.
That's right. So I even get sometimes people feel bad for putting someone in a property that's really small because they'll feel cramped or whatever. But those tenants probably like that because it's easy to clean, it's easy to heat, and the outdoor area is small, so there's not much gardening maintenance, as I've said. So may not be perfect for the investor buying, but perfect for the tenant that is their target.
Yeah, we do get a lot of investors actually, and this is off topic slightly, but we get a lot of investors at the moment chasing yield, and that's fair because interest rates are high. But do you think yield is the only thing an investor should be chasing? I mean, I noticed I'll just buy the property with the highest yield, then location won't matter.
It's definitely an interesting one, and it's easy for people to fall into that trap at the moment because obviously one thing holding investors back is servicing income with high interest rates.
Yep.
And obviously a higher yield, helps sort that problem out. But we really need to look when investing in property to find a balance between yield and growth, because you might buy a property in a poor location which has maybe a 7 or 8% yield, for example.
Yep.
But that property may have, on average, over a 20-year period, of it a 3% less capital growth to a different area. I mean, that could be $1 million in equity over that time. So, I think there's a balance. I mean, you can't be buying properties where the yields are just too low to make it work, but there's sort of a middle ground where we need to be looking at buying the properties where there's good balance between yield and growth.
Very good. So I guess future development is certainly one of the major factors we look at when determining whether or not a location is a good spot to invest in. Andrew?
Future development is a big one, and it's something we look at a lot when picking locations. And we look at it from a couple of point of views. We look at it from a global, if we're looking at a city as a whole, we look at, okay, what's the future development going to be in that city as a whole? And then we break it down and say, okay, what's happening in this suburb? What's happening in this suburb? Which ones are, going to benefit the most, or, to narrow it down. So we're getting an area with good capital gain, then we're narrowing down on the areas within that area which have the best capital gain. I guess in future development's a big one because, for a start, when the developments are happening, it brings a lot of money into the community, and as well as people. Probably, if you're talking about big projects, it brings a lot of people into the community. And what this does is obviously puts pressure on housing because they've got to have somewhere to live, and there might be some contractors around town who get big contracts out of these projects. They make a lot of money out of it, and then they go and buy a new house, or they buy an investment property, and they do it in their own town, and they might be willing to pay a bit more for it. And there's a few people that have, they feel these people involved in the projects where the money's flowing, I guess it's just a whole supply and demand thing. They might be happy to pay a bit more for the property, and then that's sort of what causes prices to rise. Another one is obviously what it does to an area once the projects are finished. And that's more about, okay, you got all this new infrastructure, or, it might be schools, hospitals, whatever it is, other projects. And what this does basically is causes more people to want to live in the area, or they might be working in the area due to something that's been built there. And this obviously brings people into the area again, and then it's just a whole supply and demand thing. You've got more people for the same amount of properties, and prices go up. So, I think future development is a big one, and we'll talk about that when we talk about a couple of locations a bit further on.
Cool.
Another important one is population growth. So
obviously house price growth is really determined by two things: supply and demand. So when demand for housing exceeds supply, generally house prices will go up. And when the supply of housing, i.e. there's more listings on the market than buyers, is greater than demand, house prices will go down. It's basic economics. Obviously, the biggest factor driving demand really is population growth moving forward. And so when looking at locations to invest in, we definitely want to be investing in locations that are going to grow in population over time. Now, one would argue New Zealand's population is always increasing. So, anywhere in New Zealand potentially makes a good location to invest. But that's not necessarily the case. Some locations like Auckland, for example, grow in size much quicker than smaller regional towns. The West Coast, for example, doesn't have a whole lot of population growth going on, which potentially means it's not a great spot to invest in property. That's not necessarily the case, but just using that as an example. But yeah, population growth is certainly one of the most significant factors that we look at when determining whether or not we'd invest in a location ourselves, I guess.
Yeah. I mean, do you think, Alex, it's always the main centres that grow at the fastest rates, or do you think that there's other areas around the country that might also, attract some of this high net migration that's coming into the country?
Yeah, I think the main centres have a track record of attracting migrants, for example. I mean, most migrants that come to New Zealand choose to reside in Auckland. And saying that, there are certainly locations throughout New Zealand, i.e. smaller towns, that have the potential to draw more people over time due to, several factors, whether it be infrastructure projects, as you said earlier, or just an attractive, place to live.
Yeah. Yeah, agreed. I think the main centres do get the bulk of it generally, but I think there's definitely other areas within New Zealand for different reasons that will attract the population as well.
Yeah, and a lot of people are priced out of Auckland at the moment, or
that's right.
The cost of living is hurting them, so they choose to look elsewhere. I mean, the cost of living in a regional town, for example, is far less than that of getting around Auckland.
Yeah, definitely. Traffic's not great up there.
No. This graph here is quite interesting. It shows historic migration levels across New Zealand. So essentially, the red line represents New Zealand citizens coming and going. The blue line is non-New Zealand citizens coming and going. And then the green line represents net migration. So both factors taken into account. But we can see that net migration, which is essentially the two added up, is at the highest level it has been for some time. And that's across New Zealand, which can really only be a good thing for house prices, because it puts pressure on, increases demand, puts pressure on supply, and ultimately pushes house prices up. We can see during COVID, migration was at all-time lows. It was one of the only time periods where there were more Kiwis arriving in the country than leaving, but obviously non-New Zealand citizens weren't arriving at all, so it had huge implications on the level of people entering the country and ultimately staying here as well. So yeah, it is nice that now we are all out and can go about our lives normally. Population growth is skyrocketing, essentially.
Yeah, I mean, it's record highs really. So yeah, as Alex said, it can only be a good thing for the property market, because all those people need somewhere to live, and there's already a housing crisis in New Zealand. So yeah, it can only be a good thing for property prices and rents moving forward.
Yeah, sure.
Cool. So yeah, how close are we to amenities? So basically what we're looking at here, as I sort of mentioned a bit before, we'll look at a city as a whole for a start and say, right, we think this is a good place to invest for a number of reasons that that we've discussed and we'll continue to discuss tonight. But then we also want to look at, okay, so within that area, where are the best places to actually invest? So we want to outperform the New Zealand average by picking the right city, but then we also want to outperform the city average by picking the best locations within that city for potential capital growth, while still obviously keeping an eye on yield, making sure that's manageable. And I mean, that comes down to a lot of different things, but it can be, okay, so where are these projects being built for a start? and is it going to benefit the specific suburb more than others and that sort of thing.
Mhm.
We've got schools. I mean, that could be existing schools, you know, people, especially in Christchurch, is a big one, buying in school zones, or in a new area, it might be, okay, there's a new school going to be built here, it's going to be a great school, etc. So people will move there, etc. Public transport, current links. So if you've got a suburb which has good public transport already, that's great, or a suburb where the public transport is, you know, going to be improving, or there's new plans to make it better over time. Again, just being close to things like medical, shops, parks, and what new amenities are going in that location, as well as the ones that are already there. And sometimes that comes down to the, you know, more mature suburb versus the new suburbs, and where is the best place to invest. Safer in the more mature suburbs, because we've got a better history of capital growth, and all the amenities are there, apart from some of the new things that might be happening there. So probably safer, but you can take a risk on an area where there's probably not such a great history of capital gain, but you know, we think the future will be very good because of what's happening in there with regards to these things. So yeah, and then what are tenants looking for as well? And you know, how does that suburb rate with regards to what a tenant's looking for and what's the tenant demand, etc.
Yeah, and I guess Andrew touched on it briefly, but obviously as an investor, tenants ultimately are the ones paying your bills, and so while access to amenities and whatnot has implications on house price growth going forward, it also has implications on how easy the property is to rent. Obviously, tenants want to live in and around amenities, and you know, things like shops, transport links, beaches, malls. So that's super important. Amenities not only are important for house price growth moving forward, but certainly for the tenantability. Is that even a word, tenantability? I don't know, of the property. But anyway,
but yeah, important, I think, to know what sort of properties are renting in what sort of areas as well. There might be areas where you know, 3 bedrooms are scarce, but there's a lot of 2 bedrooms, bedroom properties, and vice versa. Sometimes it's the other way. And we need to work out what sort of properties are renting in these areas, so we know there's tenant demand when, you know, these properties are settling.
Yeah, there are a couple of cool sites you can use as well to sort of figure out what the type of, or who the type of tenant will be living in your investment property. So you can go on Tenancy Services. Now, Tenancy Services is a really good tool for any investor, and you can see what median rents are in a specific area. You can see the number of bonds lodged per property type, for example, per 2 bedrooms, 3 bedrooms, and 4 bedrooms, ultimately to see which type of property is being rented the most in a specific area, which might have some implications on what type of property you choose to purchase. I mean, in a central city, for example, there's probably a lot of 1 bedrooms being rented, but potentially not on the periphery of a city. And so, yeah, I mean, it is important to buy the right property in the right location, because, I mean, I don't know that a 1 bedroom unit on the periphery of a city is necessarily as good of an option as a 1 bedroom apartment in, you know, central Christchurch or Auckland or Wellington.
That's right. So it's a matter of just being aware of those.
From a rental perspective. Anyway. Yeah.
And we'll get a good idea of it here, because we're talking to rental managers all the time, getting appraisals and that sort of thing. And I guess we've got our ear to the ground, and we have a really good idea of what's renting in what locations at any given time. So yeah, talk to us or one of our team about it, and we can definitely help with that.
Yeah. We used to use, I think it was a site called Infometrics, and you could actually, I believe you had to pay for it, but you could actually go on there and see what demographic made up the suburb. For example, you know, how many 18 to 25-year-olds were living in an area, or 25 to 30, whatever. And that, you know, also has implications on the type of property you should be buying as well, because if you're buying a 2-bedroom townhouse, for example, probably you want a lot of young people living in the area.
Yeah, that's right. It could be young professionals, or, you know, a young couple with one child, or, you know, that sort of thing. Yeah.
So they are, yeah, it's certainly important to take all of those factors into account, because ultimately it is the tenant that's paying your bills as the landlord and as the investor. So it's important to keep them happy. So I guess the question everybody's been waiting for, where do we think you should buy your next investment property? Now, I just need to put a big disclaimer here. We're not saying that these two areas, that everybody should go and buy in these two areas. There are certainly lots of good locations to invest in New Zealand, but I think these are a couple of locations that are probably overlooked by a lot of investors and aren't talked a lot. And yeah, I talked about a lot in the media, for example. So really, it's just food for thought. I mean, to get you thinking about other locations to invest other than, you know, the main centers or the town you live in, for example, because there are some interesting opportunities out there.
Yeah, for sure.
Yeah.
Yeah. So it's not, it's our opinion based on, we do a lot of homework on these locations to make sure, you know, we feel they really are a good place to buy moving forward. But as I said, it's not personalized financial advice. It's our opinion.
Yes.
On this.
Yeah. It's really just, two locations we've been interested in and we talk about a lot around the office.
Yeah.
And we, think deserve a little bit more attention. But again, there's plenty of good places to invest in New Zealand. Certainly not constrained to these two places. So we might as well get into it, Andrew. Where is the first place you think people should be potentially looking?
Dunedin is the first place. And it's probably one that...
Why Dunedin? The weather's terrible.
That's the question. Weather's terrible in a lot of major cities though, but people live there.
True.
And you look at London, 12 million in the greater area, winters are awful.
Yeah.
So, and it's dark. So, you know, climate's not everything, but definitely probably not going to live in Dunedin for the climate. But we think there's a lot of good reasons to buy in Dunedin, and it's really overlooked by a lot of investors, I think. Probably, I don't know exactly why. I guess it's a smaller town population-wise, and it's further away from the bigger centres, so it's more, I guess, out of sight, out of mind a little bit. But I mean, just looking at Dunedin, there's a massive amount of money going to be spent in Dunedin over the next 30 years, really, looking at all these projects.
Yeah.
So, you know, I think 5.3 billion is a lot of money to be spent. And talking about, you know, money being spent in the area on infrastructure earlier, that's going to brings money into the community, it brings people. And, you know, I guess when there's more money flowing around the community, people have got more money to spend on everything. And then shops do better, people got more money to spend on property, and, you know, everything goes up. And if we look at some of these things that are happening here, the Dunedin City Council's got a massive infrastructure upgrade plan, 1.5 billion over the next 10 years on all sorts of different projects. We won't go into them individually, but a lot of different projects. You got the new hospital being built, which is 1.47 billion. It's a massive amount of money to be spent on that, and it'll bring a lot of money into the community. And then when it's finished, a lot more people will live there because of the hospital. So I think we were looking, there was a little bit of talk around the office about whether it was, you know, how big it is and whether it was the largest project in New Zealand, but we actually came up with the fact that it's not the largest infrastructure project in New Zealand, but it's the largest health infrastructure project. So that's a huge one for Dunedin, and as it brings a lot of people into the community, and it's probably something that a lot of people don't know about. Otago Uni obviously has a plan to spend a lot of money on capital expenditure over the next, I guess, 30-year period as well. And another big one I was looking into a bit more today was the new health precinct, which is quite a massive development that's going to happen in Dunedin. It's over a 20 to 30-year period, but it's another $1 billion going to be spent in stages over that time, completely upgrading the facilities for sort of connecting to the new hospital, but also upgrading a lot of the health facilities for Dunedin and the university and everything like that. So a lot of projects going on there, a lot of money being spent in Dunedin, and probably not a lot of people know about it. So I think it just brings a lot of money into the community, basically. There's more as well. So looking at new residential colleges for the Otago Uni, Hillside Workshop boost, you've got money spent on student accommodation, and then there's a city centre upgrade as well, which is happening at the moment. That's 65 million, which is really bringing up the city centre as well. So I mean, there's a lot happening down there, and things are changing a lot and probably are set to change a lot over the coming time. So yeah, a lot to look at in Dunedin. Another thing with Dunedin, Dunedin is growing, and again, it's not growing as fast as some of the other major centres, but it definitely still is growing. And I guess the big difference in Dunedin is, well, obviously Auckland's growing a lot faster, and Christchurch and these other main centres, but there's also a lot more people building homes in Auckland and Christchurch.
Yep.
Whereas in Dunedin, there's not a lot of people building new homes down there. There's only a collection of developers. Quite a bit of the developments happening out in Mosgiel, which is a long way from the city, and there's not a whole lot happening within Dunedin itself. Dunedin's a city which is surrounded by water and hills as well, a bit like Wellington. So, there's not that many places to expand to build new housing. So if you look here, we were looking at, say, by 2054, 6,500 new homes need to be built in Dunedin to keep up with demand. It may not seem like a lot, and it isn't a lot compared to some of the other major centres, but it's 540 homes a year. And, at the moment, I think the stats show there's about 250 new houses being built in Dunedin a year, so it's less than half of what it needs to be. So it's on a smaller scale, but that's still a serious supply and demand issue. So it's something that, is definitely going to affect house prices in Dunedin moving forward in a positive way.
Yep.
As I said, supply and demand, and we're building half as many as we need to, and there's not many developers building in Dunedin, so it's probably not going to change anytime soon. So yeah, definitely.
Yeah, I actually had a look on Trade Me, must have been yesterday morning, just out of interest, to see how many new build developments were on the market in Dunedin. Now, this is excluding standalone homes, so it was only townhouse projects, but I think there were 10 projects spread across 3 or 4 different developers from memory,
so it's not
which
many.
is bugger all in comparison to, Christchurch, Auckland, Wellington. There's thousands or hundreds of projects online,
There's heaps. So, and obviously there's more people, but, it's still the same issue in Dunedin on a smaller scale, and that still affects prices just the same. So yeah, definitely a supply and demand issue there.
Yeah, and there's certainly more need for high and medium density housing in Dunedin because it is constrained by hills and water and whatnot. So it is difficult to continue the urban sprawl trend that has, plagued a lot of New Zealand cities, really. Yeah,
that's right. As we said, so townhouses, beginning to become more and more of a thing in Dunedin.
Yeah. And I guess we've really just touched on this, but Dunedin really does have a lack of warm, dry, affordable homes. I mean, if you go down there, they are pretty much, a lot of the housing stock is old villas and that sort of thing. There's not a lot of new townhouses being built, and because of that, they rent really, really well. Like on a couple of Dunedin projects we have listed at the moment, we're seeing rental yields sort of north of 5%, north of 5.3%, I think, in a couple of instances. So the yields are certainly there, and that's just because a brand new home is such an attractive proposition for a tenant, right? I remember when we actually started speaking with a developer initially in Dunedin in relation to listing a couple of his projects. He sent through his price list, and I thought, oh gosh, that potentially seems a little bit expensive. But I was proven wrong. The rental yields were extremely good, and because of that, the properties sold really, really well. Investors liked them, and there is a really good story there around Dunedin. But yeah, the rental yields are so good because of just the lack of warm, dry homes.
And a lot easier to heat. People will pay a bit more money for them because heating's so cheap. Because heating an old villa with high ceilings and poor insulation, single glazing is really expensive, especially in Dunedin where the climate, as we mentioned earlier, isn't quite as warm as places further north. So yeah.
One objection we do get a lot when talking to potential buyers and investors about Dunedin as a location to invest is that, it's full of students. I think 36% of the population was aged under 25 or in 2018. And from memory, there are about 20,000 students living in Dunedin. So, there's a lot of young people in Dunedin. They rent a lot of houses. But what you'll find is most of them don't want to live in new build stock. most of them will live in North Dunedin, which is obviously north of the city, and won't be too interested in living in a townhouse, which is a little bit further out. So I know a lot of investors are concerned about students wrecking, their properties. Students can be great tenants. Students can be great tenants because generally they rent properties room by room, which obviously makes the rent quite high in comparison to if it was to be rented out as a whole house. But yeah, I think the student thing is probably one of the biggest objections we get when talking to investors about Dunedin, but
I'd say so, but
it's certainly nothing to be concerned about, I don't think.
Yeah, it's a bit of a misconception because if you look at the numbers, 36% of Dunedin population is under 25, but the New Zealand average is 34%. So there's not really a big difference there. So I think it's more of a misconception, and probably a lot of the new build properties, as Alex said, aren't in the university areas and wouldn't be rented by university students anyway. But the university students do add to the demand, and it pushes people that don't want to live in that area into properties elsewhere as well. So yeah,
and I mean, if it wasn't for students, there would be no uni, and if it wasn't for the uni, there would be no Dunedin. Just about. I know that might be a controversial opinion, but certainly the university does drive a lot of the economy in Dunedin. Essentially, it's a huge part of it.
It is medical school and everything as well.
You may get older students, like postgrad students, renting out a new build home slightly further out of the city. That's not a bad thing. I mean, they're studying all the time. They're not out drinking and partying like the younger ones do. So yeah, I think that is definitely probably one of the biggest misconceptions with Dunedin. But that's Dunedin. I think in a nutshell, really lack of new build housing. Rental yields are really, really strong. A lot of infrastructure projects going on in there. And it's just something a little bit different,
It's got all the ingredients of property growth. As Alex said, all the things we've spoken about, with Dunedin, it's all going to drive property prices. So yeah, I think a great location and yields are better than further north. So definitely something to, think about. And there's some good projects on our website in Dunedin. So, check them out.
Yeah.
See what you think. Talk to our team about them.
One of probably the main developer we deal with down there does build a really, really nice product as well. They're great people and great people to do business with and deal with. So we love working with them, don't we?
Yeah, no, they're great. Yeah. So yeah, check out Dunedin. Next one.
This is a location Andrew's particularly passionate about. We've been talking about Cromwell in the office for a while now.
Quite some time, probably about a year. Just because we feel for a number of reasons it's an area that's really going to take off, because we can see what's happened in other areas close, and it's inevitable that it's going to happen in Cromwell, and it's starting to happen already a bit. So an area we're really excited about as an investment.
Yeah, and we've been looking for projects there, but we just haven't been able to find any.
It's tough to get projects in Cromwell, but yeah, we're getting there. We've got a good one at the moment.
Yeah.
So yeah, we'll talk a little bit more about Cromwell and why we think it's a good opportunity. You can see here that basically you've got the areas of Queenstown and Wanaka close to Cromwell, which are much further ahead in the growth cycle. And you can see the prices of Queenstown and Wanaka are significantly higher than Cromwell as an average house price. And basically, the main differences between Queenstown, Wanaka and Cromwell, I guess Queenstown and Wanaka are just more developed. So Cromwell really has the same offerings in a lot of ways, with the lake and the ski fields and the good weather, the vineyards and everything else. And I guess one of the main reasons why it's not as expensive as these other areas is because it's just earlier in its growth cycle, and these other areas have developed, whereas Cromwell probably hasn't so much. But we think it's inevitable over time, as more and more people get priced out of Queenstown and Wanaka, and Cromwell develops further, then it's going to take off. And obviously probably prices we think may even rise more in Cromwell than Queenstown and Wanaka, just because it's earlier in its growth cycle.
Yeah.
So looking at that, we think price wise it's a really good location. Probably Cromwell's a bit slower as well, because it grew a lot after Lake Dunstan was put in with the hydro, the Clyde Dam. And because of the lake there now, it's a lot more desirable than it was previously, with just a river running through it as well.
Yeah.
And that happened in I think it's late 80s, was it? Maybe early 90s. I remember driving past it as a kid. and seeing all the diggers in there. So yeah, digging the lake out. So that's made a big difference for Cromwell as well, whereas Queenstown and Wanaka have always had the lake. So that's something, yeah, something to look at too. And when looking at these prices as well, probably I think the price disparity is probably a little bit further than this even. Because if you look at, these are the areas that we've grabbed when pulling this data, and you can see Queenstown and Wanaka, we're grabbing data from quite a big area, and there's obviously some areas within those catchment zones where the prices are quite a bit lower. If you actually put a ring around Wanaka or Queens, itself, the actual town, I've heard that prices are maybe more like, the average house price might be more like 1.6 million if you're looking in the Wanaka township itself, as opposed to the catchment. Whereas in Cromwell, you can see the area we're looking at there is just Cromwell. So probably the price disparity is a lot bigger even than we're seeing here.
Mm.
So yeah, definitely something to look at, and it gives Cromwell a lot more scope for growth than some of these other areas that people are getting priced out of. So this is just as well looking at Cromwell. Obviously, we think prices are a lot lower than other areas, and a lot of people are moving to Cromwell based on the fact that the housing's cheaper, so they can get housing there a lot cheaper than Wanaka and Queenstown. And if you're priced out of these locations, then you're going to be obviously looking for somewhere a bit cheaper, and Cromwell is it basically. You can see here that this is looking at Cromwell population growth as opposed to the national average, and you can see it's constantly since 2001 really, it's always growing as a percentage faster than the national average. Mm-hmm. So yeah, and that's really important as well. So you've got that ingredient, so you've got the supply and demand issue where you've got high population growth, it's cheaper than surrounding areas, and that's obviously going to lead to a shortage of housing. So yeah, definitely there are a couple of factors to consider with Cromwell.
Yeah, I guess potentially one of the cons to purchasing in Cromwell, and I don't think it's necessarily a con, is that, I mean, this graph shows whether Cromwell is either over or undervalued at any given time period, I think over the last 20 years by the looks of it. So what we do is we compare house prices in Cromwell to the New Zealand average over a period of time, essentially to determine whether the market is undervalued or overvalued relative to the long-term average. Now, if we look at this graph, anything above 0% essentially means that the market is overvalued based on our assumptions. But this doesn't necessarily mean you shouldn't be buying in a location. Like if we look at Cromwell house prices over the last 20 years, growth has been very consistent, and the market has certainly been far more resilient than that of the rest of New Zealand since the bottom of the market, for example. Like house prices haven't really fallen in Cromwell, whereas obviously in New Zealand, and especially in the main centres, they have significantly. So it's a super resilient market. And just because this graph, based on our assumptions, says that the market is currently overvalued, I don't think it necessarily means people shouldn't be buying there, because, as I said, house price growth has been very consistent over the last 20 years.
Yeah, I think in Cromwell, even up to now, if you look in the last 10 years, I think capital growth's around 10% per annum on average. So it's outperforming the national average by quite a significant margin.
Yeah,
I think it was 7% over 20 years. So you can clearly see there's exponential growth there moving forward into the latter years of, say, a 20-year cycle. So I think Cromwell's consistently outperforming the average.
And it's a shame we didn't put a slide in this webinar, but essentially if you compare a graph showing Cromwell house price growth over the last 20 years to that of New Zealand, it is actually a really interesting comparison, because in more turbulent markets, you can just see that Cromwell is far more consistent and less turbulent than that of New Zealand. So yeah, it is actually an interesting comparison to make, and it would have been good to put it in. Yeah,
it's a very, very strong market, and prices in Central Otago generally don't go down. They might flatten off for a while and then they take off again, but they just haven't seen the falls like the rest of the country.
I mean, the thing with Central Otago and Cromwell specifically, places like Queenstown and Wanaka, is that generally in a city, people purchasing a property do so with the intention of A, either living in it, or B, renting it out to a tenant. Whereas a lot of that demand in Central Otago comes from outside of the region, right? So
That's right.
Auckland, Australians, whatever. If somebody wants a holiday house, they want a holiday house, you know?
Yeah, that's right.
Yeah.
Yeah. So it's all about the location in that case and what the area has to offer and what it's close to.
Yeah.
Yeah, so just looking here, it isn't Queenstown or Wanaka. So as I've explained already, Cromwell's still in the early stage of development. So basically, Cromwell, probably the main sort of, I guess if you're looking at Cromwell, the main issue is that probably it lacks a decent city centre at the moment.
Yeah.
But that's really improving a lot, and there's plans to really regenerate or, you know, improve the city centre. And you know, I think that'll make a big difference for Cromwell as well. It's not Queenstown or Wanaka, of course, but it is only half an hour to 40 minutes away from these locations. And you know, I guess the big thing with Cromwell is that it is a lot more affordable, so people are choosing to live there as opposed to Queenstown or Wanaka, just because it's a lot more affordable and they're priced out of these other markets. So yeah, I think as amenities improve and all that sort of thing happens, there'll be more and more. Like I guess Wanaka and Queenstown have the tourist buses and that sort of thing, whereas in Cromwell you haven't got that so much at the moment. But I think as the amenities there improve, which will happen, they'll you know, Cromwell will get more of that sort of tourism as well, which will help, I guess, improve the area further. And if you look at Cromwell, it's got all the same ingredients that Queenstown and Wanaka have with regards to, as I said, location, weather, lake, close to ski fields, etc. What it's really, I mean, it's just lacking some of the amenities of these other areas, and that's one of the big reasons why it is cheaper. But it's inevitable that Cromwell will develop to that point. I guess it's just a matter of time and how long that takes. So we think, you know, over time it's going to be a very good location to invest in, and it's affordable.
Yeah, and we've listed and sold multiple projects in both Wanaka and Queenstown. They're sold really, really well, but we just felt that Cromwell was sort of, there was probably missed opportunity in Cromwell on our end, I guess, just from, there is a lot of potential with the location moving forward, whereas Queenstown and Wanaka are much more established. And so we have been trying really, really hard to get a project or two in Cromwell that we can present to investors. I mean, everybody wishes they purchased in Wanaka or Queenstown 20 years ago, right?
Exactly. And that's what we were sort of looking at Cromwell.
Yeah.
I mean, it's much earlier in that growth cycle. You know, and prices will rise. It's inevitable because it's Central Otago, and we've seen it happen in Queenstown and Wanaka. So yeah.
I mean, it's not Queenstown or Wanaka, but hopefully one day, you know, it will be.
Yeah.
And it's only an hour between the two. So you get the best of both worlds, essentially, as Andrew said.
Yeah, you're close to 4 ski fields. You know, you got the lake there. So
yeah.
And it's affordable.
I mean, ultimately, as we said, it's a bit of a punt on a location that a lot of investors aren't buying in. I mean, most investors looking in Central Otago are looking in Queenstown and Wanaka, but ultimately with anything in life, without a bit of risk, there isn't any reward. I mean, who would have picked Apple to be the largest company in the world, you know, 25, 30 years ago, before it even, you know, existed? Ultimately, everybody that bought shares in Apple at that time is probably, you know, made a fair bit off them. So I guess you can look at Cromwell as a similar story to a company that, you know, isn't overly well established and doesn't have a big name for itself, but there's certainly a lot of opportunity there. Yeah,
for sure. And so it's inevitable one day it will be another Queenstown or Wanaka.
Yeah.
So
predominantly because a lot of people have been priced out of Queenstown and Wanaka, right?
That's right. Yeah. But I guess it does have all the same ingredients. It's just lacking the amenities in some ways, which will come over time. And so with it, you know, prices, etc.
Yeah. I mean, they're really the two locations we wanted to talk about today. As I said earlier in the webinar, this doesn't mean that we think these are the best locations as such. We think they're just locations that deserve a little bit more attention. And we're certainly not saying other places in New Zealand don't make good locations to invest or make sense.
Yeah, that's right. We've got great investments all over New Zealand.
Yeah.
So you just have to check out our website.
Yeah, we actually just launched a cool project the other day at 888 Colombo Street. So that's in Christchurch Central. That's a townhouse development built by a super reputable developer that we really like working with as well. 2 and 3 bedroom townhouses priced from 699K. Yeah, so I mean that's just one of the many projects we've got going, and we've sort of got a continuous cycle of stock coming through, right? So we're always taking on new listings, and we just try and keep our stock list fresh, because there are always opportunities out there in the marketplace, and we try to stay on top of them. So, you know, if Cromwell or Dunedin isn't quite right for you for whatever reason, then it might be worth having a look at this project at 888 Colombo Street.
Yeah, great project, a lot of space around it. Looks really good. Rental yields are good. And you know, it's in Christchurch boys and girls school zone, so it's got good school zones.
Yeah.
A good location in the north end of Christchurch city centre. And yeah, it's had a lot of interest. So
the nice thing about this project too is that if you're looking for something with completion a little bit further out, this one is due for completion the end of next year. And so, you know, really good if you're looking to lock in a price today and not draw down on the mortgage for another 18 months.
Yeah, that's right. I mean, I think the interest rate environment will look very different in 18 months' time. And, you know, a cost to own right now, which might look a bit daunting, probably by the time this project settles, would be a lot more manageable.
Yeah.
And obviously rents, again, will definitely rise in that time as well.
And if you want to check out this project, you won't find it on our website. So please do reach out to one of our investment sales specialists. They'll be able to help you out and talk you through the project in a little bit more detail. But yeah, thought it'd be just worth mentioning that one tonight.
Yeah, for sure. Great project. So we've talked about different locations tonight,
Sorry, my screen's having a bit of a spaz. Oh, there we go.
So we've talked about different locations tonight, but we haven't actually spoken about a lot of specific projects. So you can just see here, these are the deal pages on our website. So when you go to look up the Property Factory, click on projects at the top, and you can see here, these are all our projects. What we do is we basically have the projects we feel are the absolute best ones throughout the country at the top. And then we have specific locations, maximum of 6 projects in each location. And yeah, check out our deal pages. All the information is there, as I mentioned. You can see the Cromwell townhouses there. We've got some in Wooingtree Estate, which we think are a great development, single level, 2 bedroom townhouses, really spacious, park out the front, close to the lake, close to the city centre.
Yeah.
So really good development. And a good thing with that Cromwell one, check it out, is you've got excellent capital growth history in Cromwell, and it's only going to improve. Plus you've got really great yields, I think about 4.8%, which, you know, for a high capital growth location, that's an excellent yield. So you got the best of both worlds there in Cromwell with growth, I guess, capital growth and a decent yield.
Yeah.
So you can see that one there. So go into our deal pages. You can also inquire through the deal page, make an inquiry, and that'll get sent out to our sales team, and someone will give you a call.
Yep.
If you like one of our projects and there's enough information there for you to move further without talking to anyone, you can request a contract yourself, and someone will get in touch.
Yep.
So, yeah.
It is, I
Check
think
that
Andrew touched on it, but we do have access to a whole lot more projects than what you'll see on our website. We just try and keep the projects on our website not necessarily minimal, but we just don't want too many on there because we don't want to overwhelm, you know, the investors we're working with and our team as well, to be completely honest. So yeah, look, reach out if Dunedin or Cromwell has interested you at all. Give one of our team a call, because they will be more than happy to share some more info on a couple of the cool projects we've got down there. That Cromwell one is a really interesting opportunity though, and obviously there's a few options in Dunedin. I think we've got Dunedin townhouses priced from, we do have a 1 bedroom unit there, but I think the cheapest 2 bedrooms 599 in this Tainui development, which we released towards the end of last week. So yeah, really good opportunity there, and that one's a bit cheaper than the other two projects as well. So if price point has been, if you've been interested in Dunedin in the past, but price point has been an issue, this Tainui development could be worth taking a look at. But that's really it in terms of the webinar. What we will do is I will stop sharing my screen. Is that going to work? Nope. And we'll answer some questions.
Can we have access to the Zoom recording of the video seminar?
We'll have to talk to our IT guy, Jonathan. He's the boss, and see what he thinks. But yeah, Andrew and I don't really have a say in that, unfortunately.
No,
Yeah,
you can.
yeah.
I mean, they're on our website. So
yeah. Oh, you should get emailed a copy, he's saying.
There we go. How about investing in a property in Auckland? Yeah, I mean, as we said earlier, you know, Auckland's always a good area to invest because it's New Zealand's largest city. There are a lot of issues around Auckland with regards to building more houses because of the geography of Auckland, and it's surrounded by water. And a lot of people that come into the country move to Auckland. So yeah, Auckland's always a good place to invest. What do you think?
Yeah, I mean, Auckland is probably the most tried and proven market in the country, I would say. Obviously, most of the people rocking up to New Zealand and choosing it as a place to call home choose to reside in Auckland. There's a whole lot of infrastructure there. It's New Zealand's biggest city. I mean, it's only going to perform going forward.
Yeah, I think so for sure. I mean, Auckland's always a safe place to invest.
It really comes down to an investor, their preferences, their financial circumstances. A lot of people are priced out of Auckland, but yeah, look, it's a proven property market. I mean,
yeah, for sure.
Yeah.
So have you looked at Clyde or Alexandra versus Cromwell? We have. I mean, there's just not a lot of townhouse type developments going in Clyde and Alexandra. And if you look at those two locations, they're further from Wanaka and Queenstown.
Yep.
And you haven't got the lake either. So if someone was, say, working in Wanaka or Queenstown and they were going to live somewhere else because it's cheaper, they're going to live in Cromwell first because it's a lot closer. It's another good half an hour to Alexandra and probably a good 20 minutes to Clyde. So those areas are just a bit further out, and that's probably why they haven't taken off the same. I mean, they have taken off to an extent, but they haven't taken off the same as Cromwell. And we feel that there's probably not as much potential in those locations moving forward. So no, we have looked at them. Yeah.
Oh, same question. The next one, Chris, I think. Yeah. What about Clyde or Alexandra?
Yeah. So we have looked at them, but we feel the opportunity is better in Cromwell.
Any price indications on the Cromwell project? Yeah, so we've got homes in one development in Cromwell. They're priced from 755.
755 would be the cheapest ones. Yeah. And they're single level townhouses, good sized land area, and you got a park out front for that price.
That looks like it's all the questions. If you've got any more, flick them through. And we will do our best to answer. Oh, for the Colombo Street project, somebody's just asked how they'd get information on it. You can get that by reaching out to one of our investment sales specialists. They're more than happy to share a property pack with you and go through some of the numbers as well. Yeah, we're just not marketing it extensively for the time being. We think it's a pretty special project, and we'd love buyers within our database to get first access to it, essentially. So, yeah. Yeah,
so definitely talk to our team, as Alex said, about that project, and we can give you more information. Yeah.
Oh, what is the rate of return? I guess you're referring to capital growth here, as in terms of a townhouse and a standalone house. I mean, this is a debate we have a fair bit in the office, don't we?
Yeah, it's definitely an interesting question. And I guess it depends on, it's quite hard to split out the data. And a lot of times we've looked at it and there hasn't been a lot of difference, but I sort of personally feel you are going to get more growth with a house and land package because it's got a larger land component, and that's generally the bit that appreciates in value. So
yeah.
It's an interesting one, and we actually looked at a scenario the other day where we were comparing a Rolleston house and land package bought at the end of 2020 versus a project we sold in Christchurch City at the start of 2020, and we were just looking at how they had both performed over the period of time and how they'd gone through the growth and I guess cycle where prices have come back a bit. And the Rolleston House and Land package from end of 2020 to now had gone up. It was over 200,000.
Okay.
And the townhouse that we sold had gone up about 135,000.
Similar price points or?
It's similar, well, as similar as we can get, but definitely the percentage growth was higher on that. But it's hard to compare because
on the house and land package.
Oh, the percentage growth was higher
on
the house and land package significantly, but it's hard to compare because a lot of house and land packages are in locations different to townhouses, so it's hard to compare. You can't compare suburb specific so much.
Yeah, it's one of those
things. It's a tricky one.
There's not a whole lot of data to support either argument. Of the data we've seen indicates that there isn't too much of a difference. There might be, say, 1 or 0.5% difference, but probably just gut feeling. Like,
I think it's more personally, but it's
say a standalone house would perform better over time.
Yeah,
just because there is a larger land component, and ultimately there's more flexibility in terms of what you do with the property moving forward, right? Like,
that's right.
It's pretty difficult to knock a townhouse down and build something else.
Yeah, exactly.
Yeah.
But even the land component, like even looking at these Cromwell ones, they're single level, so you've got a bigger land component. Obviously, that gives more potential for capital growth as well. So there's quite a few factors to consider. Or you might have a townhouse that's over 3 levels, but it's on a very small land component, and that may not go up as much. So yeah, it's a tricky one.
It's a good question. It's a question we debate often ourselves. Which do we think will perform better long term, Dunedin or Cromwell? Look, your guess is as good as mine, to be completely honest.
Yeah.
I think gut feeling, you'd say Cromwell, wouldn't you?
I'd say Cromwell, gut feeling.
Yeah.
Then Dunedin, it's that holiday location that, and you can see what's happened in Queenstown and Wanaka.
Yeah.
And as I said, it's inevitable that'll happen in Cromwell. It's just a matter of how long it'll take, that's all.
I haven't actually got the capital growth rates in front of me or on the top of my head, but if you go on our website, you can, on each deal page, you can actually see the capital growth over the last 10 and 20 years, respectively, for each of the locations we've got properties in, and that's just at the bottom of the deal page. And generally, historical growth is a relatively good way to determine growth going forward. I guess the key thing to note with Cromwell, though, is because it's less established than Dunedin, and there's not a whole lot of infrastructure there currently. We'd probably expect house price growth to ramp up a bit in coming years, provided what we predicting will be the case actually comes to fruition.
You'd think it would grow faster, but I guess it's hard to know for sure.
Short-term accommodation in Dunedin, short-term accommodation is certainly something a lot of investors are thinking about at the moment, just with interest rates being relatively high. It is a nice way to hedge against those. Visitor accommodation, I mean, the returns associated with it generally are a little bit more than that of renting a house long-term. I think Dunedin's a great place to consider purchasing a property to rent out as an Airbnb, because there is bugger all hotels, motels. Whenever there's a graduation on or there's a concert on or a rugby game on at the stadium, it's pretty much possible to get accommodation. And so, this could be a nice option.
Yeah, definitely a lack of short-term accommodation in Dunedin. There's just a lack of motels, hotels in Dunedin, and a lot of people go there for different reasons. As Alex said, there's all the events at the uni and stadium. Then you've also got people, they might be visiting someone at the uni, or they might be a guest lecturer, or it could be someone at the hospital, or visiting someone at the hospital. There's lots of reasons why people visit Dunedin, and there's a real lack of accommodation there. So short-term does go really well down there.
I've actually had a look at Airbnb on Airbnb in Dunedin to see what sort of stock is available in the Airbnb space. But gut feeling is probably older housing as well. Not a lot of new.
There's not a lot of new.
So I guess Airbnb for a new build property in Dunedin is a particularly.
It definitely stacks it well. And we've looked at it on a couple of our projects, and the numbers actually look better than Christchurch on an Airbnb basis.
Do you have we do have catalogs, so this is the next question, sorry. We do have brochures for all of our projects on our website, but if you are interested in, so we've got a couple of Dunedin and Cromwell projects on our website. But if you are interested in a development that is not on our website, please just reach out to one of our sales guys and they'll be able to share more info with you. Is essentially the best way to do it.
Yeah. Every deal page, there is a brochure there, or a property pack, we call it. It's one of the blue tiles that you can click.
Yeah.
You'll find it there.
Andrew, you're the GST man, so
We pay taxes GST for rental income above a certain income.
I think he's just paying like over 60 grand, for example.
Yeah, so the question is, I assume this is for Airbnb, do you pay GST? Generally, you have to register if your gross income is over 60,000, I think it is. But there are a lot of changes happening in this space at the moment. And I think if you're short-terming a property, you may have to register anyway, but I'm not sure of the exact implications or exactly what's happening there, but I have seen that from a couple of rental managers talking about how they're going to deal with that moving forward. So definitely something to talk to your accountant about, I would say. But they were the rules that if it's gross income over 60k, you must register. But I think that's changing, and all short-term accommodation may have to register. So definitely something to check out, but I'm not sure of the exact how it's changed exactly at the moment.
Interesting. Last question there. How important is a car park when purchasing a townhouse? Just as a personal preference, I think I'd prefer a unit with a car park. Just better for the resale side of things, I would have thought.
Potentially. It really again comes down to who your tenant's going to be, and the location of the project. Like I'll probably don't know if you'd be buying a property outside of a city centre without a car park, because generally in New Zealand public transport isn't that great, so you're going to be driving. It depends on the street as well, how much street parking there is, or if it's in the city centre, will your tenants have a car? So that's a tricky one. It comes down to, I think it's site specific. Depending on a number of things. We've had some projects that don't have car parks and the street's really quiet, so it's fine. There's other projects we've had where there's no car parks and the street's stacked with cars. And it's probably not fine. So there's a few things to consider.
Generally, you'll find a rental yield on a unit without a townhouse, on a unit without a car park will be a little bit better as well. So that's something to take into consideration.
And cheaper as well. So you're buying cheaper and selling cheaper. So
often there'll be a 30, maybe even 40, 50k. 40k really.
Could even be more in a city centre. Depending on the location.
Cost associated with a car park. So it is a fair chunk of money for essentially a concrete square. That's
right. So specific to location. So talk to our sales team about it. They can talk you through that based on the project.
Last question there. I'm just referring to projects on the Property Factory website. So any of our developments on the Property Factory website are obviously available for sale. Have a look at the info on them. Reach out to our sales team if you'd like more information.
So I guess you just check out our website. All the projects are there.
Oh, well, that's all, everyone. Thank you so much for coming along. We'll be back again next month with another topic to discuss and go over with you all. So yes, thank you so much. If you like the sound of Dunedin or Cromwell, please do reach out. Even if you just want to learn a little bit more about the locations rather than the product itself, we're always happy to have a chat. We like talking about property and houses and whether somewhere is a good spot to invest or not. So please do reach out because we like having those conversations.
Thanks everyone for coming along. As Alex said, and we'll see you next time. If you want more information, reach out to our team. We'll check out our website.
Thanks so much, everyone. Lovely to see you and have a wonderful evening.